Coming up on Market to Market, farm foes turned back at the courthouse door, fall back and regroup. Deep deposits and a deluge reset the drought clock out west. And rural American butchers work to stay a cut above the rest. Those stories and market analysis with Don Rose next.
The other to the seller.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, April 14 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. The cure for high prices is still high prices. Last month, Americans kept their pocketbooks tightly closed, and retailers, feeling the pinch, cut back just a touch. In March, consumers stayed home for a good meal a little more often and purchased fewer cars. With cutbacks in retail purchases came lower consumer prices, sending the monthly inflation rate down 0.3%. A look beyond gasoline and food revealed the core inflation rate moved 0.1% lower. Last month, the plaintiffs in the fight to determine if agriculture could be legally defined as a point source polluter were turned back at the courthouse door. After some reflection, a new strategy is in play. Peter Tubbs has the details.
After nearly 2 years of legal wrangling, Iowa's largest municipal water provider has decided to forego an appeal of their landmark lawsuit against drainage districts in 3 of the state's counties. The Des Moines Water Works sued 10 water districts in 2015, alleging runoff from farm ground 150 miles upstream of the capital city was responsible for high nitrate levels in the Raccoon River. The municipal utility uses the river as its primary source of water for its 500,000 customers. A federal judge dismissed the suit in March on grounds that agricultural drainage districts are immune from lawsuits. Officials with the Des Moines Water Works have chosen instead to wait and see if voluntary water quality initiatives reduce nitrate levels in the Raccoon River.
To producers upstream, we certainly understand the need to make a living. We want them to be successful in making a living, but not pushing their costs and a public health concern downstream to us.
Des Moines Water Works operates one of the largest nitrate removal systems in the world. In 2015, the tab for operating the plant hit $1.2 million.
We're at a point where now we can say pretty cleanly, you know, you've said that, now walk the talk. Now show us that this voluntary process really can show measurable, sustained improvements.
Many in the agriculture community have celebrated the dismissal, relieved they will no longer face the potential costs associated with being defined as a point source polluter. Iowa Farm Bureau members are pleased that continued, measurable conservation progress can continue without the distraction of litigation. The dismissal of the Des Moines Water Works lawsuit means that focus should return to collaborative approaches to improving water quality. But Stowe remains skeptical.
I mean, realistically, we believe the voluntary principles underlying the nutrient reduction strategy are a non-starter. Counting numbers of acres of cover crops, a negligible number, incidentally, from our vantage, compared to 22 million tillable acres, isn't the measure. The measure should be actual water quality. What's happening in the rivers?
For Market to Market, I'm Peter Tubbs.
What a difference a year makes. At the start of 2016, El Niño was the house guest that wouldn't leave, and 100% of California was in some form of drought. Over the past 16 months, things have changed dramatically. Paul Yeager has the story.
The California snowpack in April of 2017 is a far cry from previous spring hikes up this mountain to gather data. The annual ride at Seasons Change gives insight into how much runoff will flow from the mountains.
Right now, they still need us to do ground truthing for the depth, but also to measure the density.
This year's level contains nearly double the water content of an average year. In recent years, survey crews hiked in shoes and not on skis to gather information. The winter season's bountiful snow and rains have allowed Golden State Governor Jerry Brown to end the drought emergency. Now, 76% of California is out of drought, the highest level since December of 2011. The northern portion of the state had the wettest winter in nearly a century. Nationally, 73% of the country has adequate soil moisture, the best mark since August of 2010. For Market to Market, I'm Paul Yeager.
There was a time when a trip to the local meat locker was part of a weekly routine. The butcher often knew every customer by name and could offer help with a selection or two. Centralized meat cutting all but eliminated the service in many communities. However, as producer Colleen Bradford Krantz discovered, the local locker has never been completely cut out of the picture.
For decades, small butcher shops and meat lockers were a staple of American life. These mom-and-pop establishments began disappearing, however, as more families began to buy their meat at one-stop grocery stores.
We've seen a fair amount of them disappear. They're older facilities, and when the current owners retire or move on through lack of interest in doing the work, and the building being old and maybe not up to date with its equipment and standards that the government like to see in a building, they close down.
But that downward trend may be slowing or even reversing. Last year, Midwest grocery chain Fairway Stores opened a brand new old concept meat shop in Omaha and expects to open another in the fall in Lincoln, Nebraska. The stores, considerably smaller than its typical grocery, aim to capitalize on both the company's reputation for quality meat and nostalgia for old butcher shops.
I hope that the customer comes in this Fairway Meat Market and has an experience of, once again, the old style meat markets from back in the 30s, 40s, 50s, 60s, the way old Fairways were from the standpoint of when they would see their butcher at the meat block, etc. But we've taken that, we've kept that feeling, and we've modernized it.
The Omaha Fairway Meat Market, the company's first, has a counter that is 16 feet longer than those in its typical store. It also features fresh seafood and grass-fed beef. And while larger metro areas such as New York, Chicago, and Los Angeles have new shops where the meat cutters like to call themselves artisanal butchers, there are others scattered throughout the nation where that kind of work never went out of style, even if those butchers don't apply the same trendy lingo to what they do.
Hey Mike, you can edit all this, right? Yeah. What's an artisan butcher?
You haven't heard anyone use that term?
I'd like to Google that.
Although Chris Kramer, not related to Fairway's CEO, would never consider labeling himself this way, he is as much an artisan, a marketing term that hints at a craftsman cutting by hand, as a butcher gets. Kramer is a fourth-generation butcher who has run his own shop in Elmwood, Nebraska since 1981. His great-grandfather was a butcher in Denmark. His grandfather, who owned a horse slaughter plant in Papillion, Nebraska, told stories of how some ate horse meat, normally used in dog food, during the lean years of World War II. Kramer's late father ran several butcher shops in his lifetime, both in Kansas and in Nebraska. In the late 1920s, the first meat lockers were opened in the U.S., and farmers or others rented frozen food storage to preserve the meat they had butchered.
From the early days, the settlers, so to speak, they did their butchering obviously on the farm. They had cellars. They would cut ice from ponds and take it into their cellar, cover it with hay, and they would have, if I recall, they could have cold meat until July under the right conditions, and they had enough ice. And then if it moves on from there, it got to where, electricity, and you had your small locker plants like this start up.
By 1940, almost half of U.S. homes had a refrigerator. Eventually, demand for the lockers fell off. Many of the surviving shops diversified by adding butchering services. According to census data, a large decline occurred between 1992 and 2012, when 45% of the remaining U.S. meat shops closed their doors. More than 300 miles to the northeast, in southern Minnesota, is another meat locker that survived the decades when so many others closed. The 81-year-old Conger Meat Market was opened in 1935 by a Czechoslovakian immigrant and butcher named Ray Butch Bohanek. An area farmer had convinced Bohanek to leave the Lake Mills, Iowa butcher shop where he was working to open his own in Conger, Minnesota. Milford Bohanek, who ran the operation with his wife Beverly from 1959 to 2000, says his father built the shop on skids, thinking he could have the building dragged to a new location if Conger let him down.
There wasn't a basement put in there until, I don't know the number of years afterwards, and they lifted the building up and put a basement underneath it, yeah.
The Bohanek family ran Conger Meat Market for 70 years before selling it 13 years ago to current owners, Jeremy and Darcy Johnson.
What we originally talked about was to leave everything the same. We didn't want to change anything. We didn't want to change the recipes, the tried and true traditions of the Conger Meat Market. They worked for 80 years, so that's not something we were going to change.
The couple has tried to keep the big things, like Butch Bohanek's traditional recipes from Czechoslovakia, and little things, like handing out samples from the meat smoker to kids, while making plans for future expansion.
We thought it's a great opportunity to buy an established business and to be self-employed.
Currently, the meat sold in their small retail shop comes from larger federally inspected meat packing plants that are scattered throughout the nation. They, like many smaller state-inspected meat lockers, are limited to connecting livestock producers with buyers looking for custom-cut quarters or halves of beef, pork, or venison. They are also restricted to in-state sales.
Our job, in a sense, is easy because we are surrounded by so many successful farmers, and the quality of the meat that's coming in is just second to none. And I think the customers are happy when they come through our door because they know they're going to fill their freezer with locally raised, good quality beef or pork.
This fall, Darcy and Jeremy Johnson hope to open a small, federally inspected meat packing plant in an old creamery next door. Because they will be federally inspected, they will be able to sell locally raised meat in smaller amounts directly to the customers. The designation further allows for sales across state lines. So far, the creamery they are renovating for the Conger Meat Market expansion does not appear to feature any skids.
I think the Conger Meat Market will be here for another 80 years.
For Market to Market, I'm Colleen Bradford Krantz.
Next, the Market to Market report.
The holiday shortened week came to an end on an uptick despite official reports showing an excess of grain around the world. For the week, May wheat gained 6 cents and the nearby corn contract moved 12 cents higher. WASDE and CONAB reports revealing burdensome supplies did little to discourage the market bulls as the May soybean contract rose 14 cents. May meal added $10.10 per ton. In the soft, May cotton was $2.16 per hundredweight lower. Over in the dairy parlor, May Class 3 milk futures bumped up 11 cents. The livestock sector was friendly to cattle, but not so much for hogs. The June cattle contract strengthened $2.90. May feeders soared $4.53. However, the June lean hog contract shed 27 cents. In the currency markets, the U.S. dollar index lost 65 basis points. Crude oil put on 94 cents per barrel. COMEX gold gained 28.60 per ounce. And the Goldman Sachs Commodity Index climbed more than 4 basis points to finish the week at 401.30. Here now to lend us his insight on these and other trends is one of our regular market analysts, Don Rose. Don, welcome back.
Thank you, Mike.
Before we get started, you can listen to our market discussion anytime by downloading our market analysis podcast on our website, iptv.org/MTOM. Don, let's start. We had the WASDE report out this week, and it just seems like we keep finding more and more bushels of wheat globally. When is this crop going to stop growing?
Well, and you're exactly right. We not only found more wheat, but we found more of almost all the grains. So we've just got huge world supplies, corn, soybeans, and wheat. But the good news is pretty much all that news has been baked into the market right at the present time, Mike. We went down, we continue to hold this 420 in nearby wheat. We really can't break under that. And you're right, the acres in the U.S. are at 100-year lows. We're 9 million under 2015. But I think when you really back up and look at the wheat market, the U.S. raises 8.5% of the world wheat. So we're not the big player in the world. And I think we're starting to watch the weather in the Black Sea region. They raise about 33% of the wheat. Europe raises about 20% of the wheat. So those are the two big players when you're raising 50% of the wheat that we're going to watch. And, the weather conditions here in the U.S. Continue to improve. So I think it's more start to watch the world weather in those areas.
Anything out there in the Black Sea region or in Europe today weather-wise that could give a little pep in the step here of the wheat markets?
Well, and that's a good point. I think, we are a little bit dry in both of those areas. Not anything big yet, but I think we just kind of watch it. And I think, the other thing that you have to be real careful of is the funds are sitting near record short. This market very much is a technical market anymore. When these funds start to move, they move and move fast. So keep an eye on the technical points and keep an eye on the weather. More so, I would say, in Europe and in the Black Sea region.
Okie doke. Let's talk about the corn market. We did see a little bit of strength this week. It seems to be kind of comfortable trading where it's at. Are we to a point now where we're starting to watch the weather here over the Corn Belt, seeing these thunderstorms roll through the heart of the Corn Belt? Is that going to give us a little premium as we move on into planting season?
Well, I think it is. And I think if you look at it, much like the wheat, we've got an awful lot of negative news already into the market. We had some negative supply-demand numbers this week. Really didn't budge the market. Big crop in South America, Argentina, Brazil on corn. But when you really look at it, it's that time of year that we watch the weather. This is no time of year to be real overly bearish on the grain market because the weather is a dominant issue. And like you said, I think we're 3% planted on corn last week, probably going to be up around 7 or 8% planted, this weekend. But I think the trade's going to get more concerned if we move into the end of April. If we're not close to 50% planted, then I think you'll add some more weather premium. And then, it's not only the acres. You talk about, do you have prevent plant acres more? Do you have less corn acres? Do you have more bean acres? Could the yield be less? So you start to just add some risk premium to the market, like you said. But it's a market that we're well supplied with grain. So rallies are still very much short covering risk management opportunities.
What price level do you want to start making those new crop December 17 sales at for a producer? What numbers are you watching?
Well, when you look at the big supplies, we're at about 2.3 billion carryover on corn, plus probably next year the same. So big supplies in the world. You have Argentina and Brazil, both with big supplies of corn coming at us. They export about the same supplies we do. Last year their crop was getting smaller. This year it's getting bigger. So your real question is, what price do we make some sales at? And, $3.95 to $4 is a tough area on D's corn. But, here's one, when you look at it, usually from the winter lows, we usually have about a 50-cent rally in the corn sometime during the summer. And so that'd put you up to 428. So it's possible with weather scares to get up into that zone. The last 2 years, we went up close to 450. But also, look at 2018 corn. You get between 410 and 420. Those are probably risk management opportunities. If you put a 30-cent carry on that, you're 450 out into July 19. So it's a long ways out there, but keep an eye on it.
You're right, and that's a place you can get plus $4 corn today, is when you look out into the future.
Exactly, and you don't have to have tight sales out there. You can do some risk management with some loose option strategies that still give you the up and the down.
All right. Soybeans. Oh, it's been a tough 2 weeks or 3 weeks or 4 weeks in the soybean market. It looks like, from a chart perspective, maybe we've put a low in. Is the low in, Don Rose?
Well, it looks like an intermediate low.
Okay.
And I think what we really had this last week, we had a reversal week in both soybeans and on the soybean meal. The trends on all these grains, short-term trends are up. The funds are back to about pretty much neutral. Big supplies are baked into the market again over there, and usually, much like the corn on the soybeans, sometime from the winter lows to the summer highs, on average, we have about $1 rally. So you take the low was 941, looks like a little bit of a low right now, intermediate. You know, if we hold that, 1041 sometime during the growing season is possible. Right now, short term, 980 to 10 looks like catch-up sales if you're not banking on weather.
All right, and that leads us right into, we got a question here from Richard in Wisconsin. He sent this to us on Twitter. We encourage all of you to find us on Twitter and on Facebook. Just search for Market to Market. Richard wants to know, are we at the bottom of the grain bear market? Looking at the industry as a whole, harvest futures are red with dispiriting losses before we even finish planting. You mentioned there's hope. How realistic is that hope? I mean, as we look at the 50 cents in corn, $1 in beans, if you were a gambling man, would you say there's a 90% chance we'll see those rallies?
Well, I think what you need to do is make sure you do some risk management. When you're carrying around big supplies and you need weather really to turn into something that can reduce the size of the crop, I think make sure you do some risk management and hope for that. But I think, Mike, just quickly, on the big range, I think the corn market, the new era, we found out we're probably in a range of 3 to 450. The olden days it was 2 to 3. Soybeans, I think we're in a range from 8 to 1050. The olden days we were 6 to 8, 6 to 9. And then weather markets can push you past those areas. So, this, again, just is not a time to be negative, but fundamentals are overwhelmingly negative for the poll.
Okay. Now, you're a cattleman. Longtime cattle producer. We've seen a lot of enthusiasm in the cash market for live cattle. The bids just keep getting stronger and stronger and stronger. On top of that, as our friend Shelby in Decorah, Iowa points out from Twitter at Shelby Cornelius, he's asking, with China lifting the ban on U.S. beef, how long before we see that impact of maybe some Chinese purchases in the cattle markets?
Well, President Trump did have the meeting this last week with the president of China, and that's where the optimism bubbled to the top again. Because actually the beef ban has been lifted since September, and it's the regulations that they can't seem to overcome. And they're talking optimism in the next 100 days is something's going to happen. But here's one that's very interesting, is that our import pace equals our export pace. Our export pace is about 10% of our production, but this next year we're actually going to import more beef than that. So it's really domestic consumption that you're really hanging your hat on. Okay, and the consumer, as we go into summertime, do you anticipate to see that domestic consumption continue to grow? Well, we always say if the economy's good, the beef market's good. The economy's been pretty decent here. So, but I think when you look at the cattle market seasonally, this is a time of year where you have to be a little bit cautious on a market. We probably work to the downside. I'd say that we're putting in the top in the cash. It's just that the futures market's been trying to do that for basically a couple months, hasn't had much luck. But the government has cash cattle at 110 to 120 for the year. The problem is they haven't been very accurate. They were off $36 a hundredweight last year and $26 the year before. And they were off to the upside. They were off to the upside. This year so far, they're off to the downside. Exactly, that's right. So how aggressive, if we are approaching a top in here, how aggressive do I need to be on my forward sales, my forward risk managing out through the summer? Well, we're going to have about 7% more cattle all the way during the summer. Then in the fall, we're about 0.5% more. So I think you have to be more aggressive during the summer. August cattle in June probably are the most negative. The most positive are probably December and February. But we're going to have big supplies. We're going to have 4% more beef this next year. We're going to have 2% more poultry and about 5.5% more pork. So there's no shortage of protein meat out here. And that's why you have to keep your risk management up when you're on this kind of a rally. Particularly the feeders, they're an overachiever also. You bet. And let's talk about that. They are an overachiever, especially this week. We saw gains in the feeder market well outpace gains in the live cattle side. Is that just a function of cattle feeders, especially the unhedged ones, are making some money now? They're pouring it right back into feeder cattle, and we're seeing that on the board? Yeah, I think that's really what's happening. In fact, actually, we're in contract highs, not only on the feeder, but also on the fat market. And more than that, on the live market, we've got more players than we've ever had in history right at it. Open interest is at an all-time record. So the speculator, the funds, the hedgers are all involved in the market. So it's a big market out here, and the index funds are long. Okay, and so the specs, they're all long this market, both feeders and fat cattle? Exactly. And so that's a good story today, and if they start to move, and that's why you have to keep an eye on the charts, these technical points, you have to know them sharp, because when it tips over, it can move over pretty fast.
Do you have points in hand that you're watching from a technical side on the feeder cattle market? Closed right up here around 138.40 in the May contract. Are we getting close?
Yeah, I think, if the feeder market drops about $1.50, I think the trends will start to turn weaker. So watch for that. It's all good until it's in. It's like musical chairs right now. Okay. Don't be the last person trying to find a chair.
All right. And then lean hogs, before we let you go, are we just at a point of stability here in this market? We see some up and down each week, but at the end of the day, we move 27 cents on the week. Where does this market go into the summer with that growing hog population?
Well, we're trying to figure out if we're at a bottom here, and the government has an idea. They're saying for the rest of the summer, 60 to 63. The futures are well over where the government is saying we're going to have about 5.5% more, 5.1% more hogs during the second quarter, and then 5.5% more in the fourth quarter. So we've got a lot of numbers coming at us. The real thing you have to remember is seasonally we usually start a rally on the hog market, but you have to be careful with these big supplies. If we're going to have a contra-seasonal like we had in 2002, everybody was looking for a rally. We never did. The big supplies overwhelmed the market. We went lower right into the beginning of June.
So how do you want to manage risk given that potential threat is out there?
Well, the fourth quarter, no doubt, has a lot of premium in the market out here. The government's saying 48 to 51. Where we were last year on hogs, we went to 42 on the board, and right now they're saying we're going to have 5.5% more hogs. $2 to $3 rallies in all these months are risk management opportunities.
All right. Well, Don Rose, we want to thank you so much for taking the time to visit with us this week, and I hope you have a great weekend.
Thank you, Mike.
That wraps up the broadcast portion of Market to Market, but Don and I will keep the conversation going, including answering more of your questions during Market Plus, which you can find on our website. Now, while you're there, iptv.org/MTOM, check out The Classroom. This virtual schoolroom allows you to explore the science, technology, and business of agriculture. And join us again next week when we explore a sour note in a sweet domestic industry. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.